There were a lot of major things to know today, especially heading into tomorrow when we do have a big speech from Fed Jerome Powell. So I think this video is really an urgent one for all of you to see. So let's start with what happened today and a little bit of good news and bad news heading into Jerome Powell tomorrow. Good news is today you had 10-year Treasury yields that actually fell about 3 basis points, down to 4.47%. The bad news is heading into Powell tomorrow, the VIX is up almost 8%. Now, how the VIX works is it measures calls and puts on the S&P 500. So if there's more calls going in on the S&P than puts, the VIX will go down or stay down. If there's more puts going on to the S&P options chain than calls, you will see the VIX rise. So with an 8% up day for the VIX and the S&P being marginally lower today, that's telling you there's a lot more puts than calls being bought today for this week. Now, there are obviously other events taking place this week, but Jerome Powell coming tomorrow is going to be a big one. Speakers in recent days have made the argument that maybe we're not even at neutral, that maybe the neutral rate is higher than what we previously thought. And I believe that just highlights how behind the ball the Fed truly is. And if Powell takes that same approach, that's going to be seen as a big negative for markets. Although, judging off of the Russell 2000 being the outperforming index today, that's probably not what is going to happen. I believe Jerome Powell is going to sound very dovish, if not just cautious on the economy. Now, if Jerome Powell is too cautious on the economy, that's not going to be a good thing either. Markets are currently assigning a 9% chance of a rate cut coming in the next Fed meeting. That is 4 weeks, 2 days, and 22 minutes from now on June 12th. And then on July 31st, the markets are assigning a 27.6% chance of a cut, 70.4% chance of a continued pause. September is the first Fed meeting in which you're actually expecting the Fed to cut rates. There's a 49% chance of a cut September 18th and a 35.2% chance of a continued pause. Based on what Jerome Powell says tomorrow, the odds are going to move around quite a bit for rate cuts. I believe Jerome Powell being dovish tomorrow and maybe just outright cautionary on the economy is probably going to raise the odds of a cut coming July 31st. Now, here's why I say if Powell is too cautious, that is going to be a bad thing for markets. Because if the economy weakens too much, if Jerome Powell sends off those kind of vibes or signals, that's bad for company earnings. That's bad for valuations of markets. Slight weakening with the expectation that inflation falls, then now that's a different story. That's the best case scenario. As bad as everyone wants to see the economy weaken and get worse from here, that does have negative financial implications for the markets. And the Fed cutting rates is not going to offset that. That would be net negative for stocks, especially when you're sitting at near all-time highs for markets. Now, what I find very interesting about tomorrow's speech from Jerome Powell that comes out at 10 o'clock in the morning tomorrow, the next day, you're going to get CPI that comes out at 8:30 in the morning. Jerome Powell's made it clear to us before. I was surprised when he said this, but he did say Fed officials can get data reports a couple days sometimes before they are released to the public. So likely today, Jerome Powell got the report of what CPI is going to be coming on Wednesday. Depending on the stance that he takes in his speech tomorrow, it's going to tell you direct implications for how CPI will be on Wednesday. If Powell is not as worried about inflation, if Powell is more cautious on the economy, then maybe that means inflation came in lower than markets are expecting on Wednesday. Vice versa, if Powell sounds more cautious on inflation, that maybe they're not restrictive enough, or maybe they need to raise rates again, or anything across, those lines, that's obviously going to be seen as a negative, and maybe that CPI is going to come in hotter than expected on Wednesday. So I think Jerome Powell's speech being the day before CPI does make it a little bit more important. Now, coming tomorrow morning as well at 8:30 a.m. Eastern Standard Time, you will get PPI month over month and core PPI month over month. These are going to be important numbers. So for the PPI month over month headline, you're expecting 0.2%. Last month, you came in at 0.2%. So PPI, think about it like this, is producer price index or producer price inflation. The inflation the companies are feeling. CPI is consumer price index or consumer price inflation. So PPI, if PPI goes up, that tends to lead into CPI. Also worth mentioning is recently we have seen GDP come in lower than estimates, service, manufacturing data points coming in lower than estimates. Last week you did have the first rise to initial jobless claims that you have seen in a very long time. You have to go back about a year to get initial jobless claims as high as they were last week. And then if you look at the last non-farms, you came in 60,000 jobs lower than expected. There's definitely some weakening out there, let alone companies like Starbucks and McDonald's and others warning about the consumer. It's important to remember that inflation is simply the willingness of the consumer to spend money and to buy things at higher prices. Think about it like this. I was telling someone about this recently, but you can think about inflation like this. If, let's call it Walmart, needs to have 100 people come through the door every day, just to keep this very, very, very simple. If that's what they need to, stay in operations, let's call it, and prices are just so high, the consumer is doing poor. If they start to see 90 people going into that Walmart every single day, you're definitely not going to get prices going higher. But if you have 150 people going into Walmart every day because people have a lot of money and they're able to buy things, then you're probably going to see inflation. And if, for lack of a better analogy, if you start to see less people, like 80 people a day going into that Walmart, then you might actually start to see some deflationary pressures. Now, deflation is obviously not good, but the point here is inflation is mostly correlated to the consumer's willingness to spend money. You're definitely starting to see the consumer cutting back. I think that does put some pressures on inflation and pressures to the downside on inflation. So that could be not really a leading indicator, but something I have been watching in recent weeks that would suggest this latest round of inflation you've seen in 2024 is probably not here to stay for the entire year. And maybe April is the first report that we start to actually get some progress on that front. Coming out tomorrow morning at 6 o'clock in the morning, you will also get the NFIB Business Optimism Index. Now, this could actually be pretty important as well because, take a look at what this index has been doing for a while now. In December of 2023, you came in at 91.9 points. The next month, 89.9. The next month, 89.4. And the month of March came in at 88.5. You're actually expecting this will fall yet again down to 88. So if you're seeing businesses that are not nearly as optimistic as they were previously, that's clearly not great. This is the least optimistic businesses have been in a very long time. This is a 10-year chart. A 10-year chart. You are at the lowest level of business optimism you have seen in 10 years. If you pull this out to a max chart, you have to go back to, let's see, the double dip fears, double dip recession fears back in 2012 or so to get a number that is as low as you are today. And that number came in at 87.2. It wouldn't surprise me if the number tomorrow comes in even lower than that. And that's a pretty bad sign for the overall economy. Your Rona crash lows, this number came in at 90.9. So you're you're well under that right now. And if it drops further, well, yeah, that's not great. Tomorrow, about 50 minutes before Jerome Powell speaks, you're also going to get a speech from Fed Cook. She'll start speaking around 9:10 a.m. tomorrow, and that could give us a little bit of an insight to what Jerome Powell may also say, because I doubt it's just Powell that gets these inflation reports. I'm sure it's Fed Cook, Fed Bowman, Fed Bostic, and probably every other Fed official that gets these inflation numbers as well. Now, here's a little solace for the bulls out there. This post was written by Seth Golden and says, prior 5-month rally has been one of the best in history, but the totality of the bull market is anything but. Still time on the clock, but SPX, S&P 500, first 2-year bull market performance running well below the average of 54.9% at 40.9% to date. Bubble? What bubble? Meaning that normally when you go into a bull market the first 2 years, you can have some very big returns. Right now, it's close to, I wouldn't say average, close to the low end of average. Fed Jefferson also said today that the economy has made a lot of progress, but inflation has retreated. So potentially that's a little bit of a heads up that Wednesday CPI report could come in on the lighter side. You also had a new survey that came out today, polling 108 economists. 65% of them say the Fed will cut rates by 2 times in 2024. That's 50 basis points. 17 of these economists believe the Fed will cut rates over 50 basis points. And only one economist says no cuts at all. Markets are currently expecting about 2 cuts for this year, with odds of 36.2%. 1 cut is sitting at 32.9%. So you're pretty close to 1 cut, maybe 2 cuts. 3 cuts is priced in at 16.9%, and 0 cuts is priced in at 10.6%. Now, here's where you get into the lower odds. There's 3.2% chance of 4 cuts and a 0.2% chance of 5 rate cuts this year. CNN's Fear and Greed Index today is sitting at neutral at a number of 50. On Friday, you were at 47. Market momentum is in greed territory. Stock price strength, this is net new 52-week highs and lows on the New York Stock Exchange, is in extreme fear territory, only at 1.98%. Stock price breadth is neutral. Put and call options is in greed territory. I don't know if they're taking this from today's numbers, because if you look at the S&P and the VIX today, there's a lot more puts being bought than calls. So I'm not exactly sure what that means, but hey, we'll let CNN do their own thing. Market volatility is neutral. You can see the VIX and its 50-day moving average. You're definitely starting to move up on the VIX, closer to that 50-day moving average, but you're still off of that at least a little bit. Safe haven demand is neutral today. That is the difference in 20-day stock and bond returns, but you're definitely starting to see an uptick there. It looks like bonds outperforming stocks by about 2.37% over the last 20 days or so. And then junk bond demand, junk bonds versus investment grade, is sitting at about 1.63%, which is also neutral. Most recent AI investor sentiment survey shows 40.8% of investors are bullish, 35.4% are neutral, and 23.8% are bearish. So with all of this said, by the end of this week, after we have CPI, PPI, we have retail sales, we have the speech from Fed Jerome Powell tomorrow, Walmart earnings, we're going to have a lot better understanding what inflation is doing, what the economy is doing, what the consumer is doing, which, considering consumer spending is about 74% of the GDP or economy, they kind of go hand in hand. We're going to be able to judge whether or not the markets are slowing too much, whether inflation is falling. We're going to have a lot more new details. But most importantly, tomorrow, we're going to get that speech from Powell. And if he sounds, again, dovish, conservative on the economy, that's a sign that probably CPI coming in Wednesday is going to be on the lighter side. Now, if he sounds too cautious on the economy, that maybe there's pain starting to be inflicted on the economy, that's problematic. And again, if Jerome Powell says, maybe we're not at restrictive, maybe we need to raise rates again, anything's on the table, then that's not a good sign heading into Wednesday. And I think the markets may just react more tomorrow based on Jerome Powell's speech than CPI itself. But that's to be determined. Let me know what you think down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a fantastic rest of your day, and I will see you in the next one.